I'm joined by Ryan Irvine, President and CEO of Keystone Financial. So Ryan, what got you started in the first place with investing?
Well, I mean, I love stocks, I love investing, but we found there wasn't many independent services out there that we could go to that would actually find us a company with good solid revenues, good solid cash flow, and good solid earnings, and wasn't either affiliated with a broker or wasn't doing work with that company unto itself. We're paid by our clients, so we're individual. Not many research facilities out there like that. We offer that, so we kind of filled a niche in the market, and we've been doing it for about 18 years, and we have 2,000 to 3,000 clients across the country.
Wow, really good. Now, how do you advise investors in doing your own portfolio, getting started in it?
Yeah, it's a great question. You build that portfolio not in 1 week, not in 2 weeks, not in 3 weeks or a month. You build that over a year to 18 months. Using our service, we tell you not to buy one stock, because if you're buying one small cap stock, that's far too much individual risk.
Right.
You're not going to buy 30 stocks though, because you've just bought the market. You might as well buy an index fund or an ETF and call it a day. We buy, the sweet spot is between 8 and 12 companies, researched, well thought of, cash flow, earnings-based stories, 8 to 12 over about a 6 to 18 month period, and add those to your portfolio. You use a discount brokerage, so it costs you about $10 a trade, and we don't trade in and out of stocks. We're buying a company and looking 2 to 3 years out, and where that company can grow its earnings over that time and hopefully grow the share price.
Well, you analyze thousands of stocks. How do you comb through it?
Do.
What do you avoid? What do you look for?
That's a great question as well. We have about 10 things that we check off in our little checkbox. Some of the main things are, we discard a company that doesn't have any revenues. It's just too high risk. We find companies with revenues that trade at low prices. You look at cash flow. You look at management who have a significant stake in the business, because then they're pulling on the same rope that you are. That is key for us. Often some of the management teams own between 10 and 30% of the shares. They will return capital to you in dividends because they're getting paid that way too. It's a great way to invest. There's a number of other things we look at, but every year one of the things we do is we look through every public company in Canada, 3,000. It takes 3 months. You look through all of their financial statements and MD&As, pick out companies that are earning money, pick out companies that have growth going forward, call management, interview them, see if the business is good, and then find those cash flow and growth companies that are trading at reasonable prices. So it's quite the process, but you find those gems. It can be very exciting and very rewarding.
Well, do you have any recommendations for an investor getting started with a DIY portfolio?
For sure, we can give you an example today of a company we've covered for about 2 years now. It's called Photon Control. They provide a kind of a back-end manufacturing process for the Internet of Things. That's the real sex appeal to the story. They provide optical sensors for the production of semiconductors. Now, semiconductors are in everything from your toaster today, talking to your fridge, to your smartphone. So that is your whole Internet of Things. Well, this company trades at tremendously low valuations is what we look. It's kind of an orphan company. We picked it up originally at around 20 cents, recommended it again at 40 cents, again at 60 cents. Now it's trading around $1, but it has no debt, 30 million in cash in the bank, and per share basis, that's 30 cents. So if you take the 30 cents out of what you're paying, $1, you're paying 70 cents for the business. They have 8 cents in earnings, so you're paying about 9 times earnings. There's growth this year. They have a tremendous backlog, the biggest backlog they've had in the history heading into their next quarter. So what you've got is a reasonable price, growth outlook going forward. Those are the things we love to see. And a management team who is on board with growth and buying back their shares, which is another thing we look at, a company that buys back shares or pays dividends.
Well, Ryan, thank you so much for your time here.
Excellent. I thank you very much. Thank you.
To learn more about Keystone Financial, you can go to keystocks.com. I'm Rachel Lee for SmallCap Power.